by selecting Drawings, Drawing Tools, and then for symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
It's a 13-hour flight. That's not a weekend trip.
15 minutes.
Oh, wow, I gotta take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. Ah, they're getting so smart.
Choose the app that fits your investing style.
When traders tell us how to make Thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Welcome back to Market on Close. Let's check where the markets finished up the trading day. Well, we're off the highs, but also off the lows. Looking like the S&P, the best performer of the day, up 0.4%. Dow up 87 points, or 0.25%. NASDAQ also up 0.25%. And the Russell didn't manage to make it above the unchanged line, but closed off of its earlier lows. It's down about 0.4% today. All right, it's time to bring in our expert panelists to wrap up the day. We have Mike Krusch, Senior Specialist Futures and Forex Trade at TD Ameritrade, and Kevin Green, Senior Derivatives Manager at Charles Schwab. Kevin, let's start with you. We broke a two-day losing streak, but what stood out in today's markets? What conclusions can you draw from the action that we saw, especially as we headed into the close?
Thank you, Caroline. I would say right now the conclusion is that we still have some bullish buyers that are out there, and we continue to see this trend. And we saw it yesterday, we saw it today as well. We talked about this in the morning segment of the VIX actually hitting up to about that 24, 25 level. And as soon as we saw that hit, not only yesterday, but close to hitting 24 today, we saw some immediate buyers coming into the marketplace. So that's showing a little bit of strength. Now, you got to keep in mind, too, those that were actually leading the market, healthcare, consumer staples. It's nice that they were able to lead today, but I'm not sure how long you're going to be able to have that last and still have the indexes go up. If anything, if those industries and those sectors still do perform fairly well, you probably would see some sideways action in the S&P 500. But overall, if you can see that VIX coming down below 20, that would be bullish on the marketplace right now, if you can stay away from that 25 level. But we do see some buyers coming in. There's some bulls that are still out there and trying to make this market rally to the upside.
Mike, let's bring you in terms of, I know you have 100% confidence in the Fed. We've talked about this before. I saw your note about the Fed sticking its soft landing like Nadia Comaneci, the Romanian, I think, gymnast, not journalist. But This market has been jittery about how hawkish the Fed actually will be until today. What do you think's priced in at this point in terms of how many rate hikes the market's expecting?
Oh, too many. The market's jittery like anybody who doesn't understand what it's supposed to understand and is sitting down facing a test every day on where prices belong. The Fed's made this extremely clear. They're going to make their adjustments to a post-stimulus, more inflation priority world, but they're not going to go back to the 70s and do the, sort of leeching and bleeding of archaic economics. They know how to manage the economy and get us through for a soft landing. And once the stock market figures it out, things will change like they should. I mean, in fairness, there are fundamental business considerations for individual businesses, but take a look at the big picture and then focus on what really matters. Costco and Walmart are raging through all-time highs and trending like they can't move fast enough. If you're watching any of this financial market analysis, reading anything, and somebody questions the confidence level of the consumer, just dismiss it. It's silly. I mean, the consumer is thriving. The laborer is thriving. The economy is strong enough to take at least another 400 basis points of hikes if necessary. And the Fed's not going to do anything for its own sake. They'll do what we need to keep a great economy.
The consumer is thriving, but consumer confidence numbers show that the consumer is nervous or not so confident about the future. But Kevin, going to you to build on Mike's point that we did see that all-time high or the high in Walmart. We see consumer staples up. We also see healthcare up. We've seen the Dow transports down. Do things feel a little defensive to you in this market? What do you make of that pivot?
They do at this point in time. I think every stock that you just mentioned there also has something in common, and that's pricing power. And so the stocks that are having, the companies that have pricing power are the ones that are going to thrive in this particular market where there is some uncertainty, but there is also some pretty good consumer spending. But you also have to just kind of keep in mind here, I don't believe the market is really factoring in any type of adjustments to earnings and that we may actually see here in the coming weeks. We got bank earnings coming out next week. I think that probably would put a little bit of a hiccup into this marketplace right now, but the companies that have some pricing power, especially in those ag areas, and also in the energy space as well, are probably going to continue to thrive. Walmart has just tremendous pricing power at this point in time, and then also taking a lot of market share away from Amazon, which has been stalled to say the least about that stock. So yeah, overall, that's the reason why we're probably seeing some of those stocks actually continuing to rise.
So, Mike, in terms of other stocks that are supposed to thrive in this environment, not so much with pricing power, but in a rate hike environment, was supposed to be the banks, but we saw Goldman Sachs hit a 52-week low today, ended up closing down about 0.7%. What's going on there? I thought the banks were supposed to be performing well.
Well, Goldman Sachs actually looks fine. If you use your Thinkorswim platform to take a look at a max weekly chart all the way back for Goldman Sachs, you're going to see Goldman Sachs is very safely above the levels it broke out above on its most recent trending move to its highest highs, and it's solidly $40 or so above the zone of interest that would be sort of former resistance representing support. So Goldman Sachs in a bigger picture sense doesn't exactly look like a Lehman Brothers situation. It's fine, not to make a recommendation or give advice, but stocks move, stocks fluctuate. This one's fluctuating well above the levels that it was capped at before. But the thing to keep in mind is that the future of banking is not going to boil down to traditional sort of, 363, borrow at 3% riskless, lend to your local business at 6% and go play golf type banking. It's 2022. These companies have to innovate and make changes to the way they make money, and the traditional models aren't the model that they're under right now. So I would say that when we look at the financials, so to speak, you got to throw out your grandmother's playbook. Your grandmother probably saw Nadia Comaneci drop to 10 when she did her floor routine and move forward to 2022, where innovators and disruptors and alternative forms of banking are becoming much, much more relevant. Goldman Sachs, unfortunately, is not a leader in the SoFi, Affirm, upstart type modern algorithmic banking. But they can't be knocked down forever. They'll find a way. They're like the dinosaurs at Jurassic Park.
Well, SoFi's down 7% today. I was using Thinkorswim. I'm not saying it's a Lehman Brothers, but it is down 17% year to date. And I was told coming into this year, the banks, and that's underperforming the market. But unfortunately, we do have to leave it there. So we'll come back to it at some point. Mike, Kevin, thanks so much for your insights. Coming up, the CEO from Flywire will join the show. Wells Fargo put an overweight rating on the company this week. Market on Close takes a quick time out, but we'll be right back, so stay tuned.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock, takes a more numeric look at similar information. If you find any of the information particularly helpful, you can print it out or take a screenshot. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange, bringing you real-time market coverage and access to the biggest newsmakers on Wall Street. Don't miss Trading 360 and the Watch List live from the New York Stock Exchange.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Flywire began publicly trading back in May of 2021. Since hitting highs in October of last year, the stock has pulled back alongside the rest of the market, but some analysts see an upside ahead. Joining us now to discuss Flywire, the company's CEO, Mike Massaro. Thanks so much for joining us, Mike.
Caroline, thanks for having me.
It's great to have you. So first, if you will, just introduce us to Flywire for those who aren't familiar. Tell us what you do.
Sure. So Flywire is a payments company. Many people probably know companies that have helped digitize e-commerce and retail. Flywire focuses on large dollar payments. So things that have been poorly digitized in the global economy, things like education payments, healthcare payments. If you've had a medical expense and you go to a hospital and owe a bill, anybody knows that that payment experience is quite awful. Maybe you're going on a large family vacation. So we focus on these large sectors of the global economy that have been poorly digitized, and we help them with a combination of software and our own proprietary payment network. And so the company has had a lot of growth through across these sectors and across over 32 countries where we have our clients.
Well, Wells Fargo put your company at an overweight rating with a $41 price target, currently trading around $30 right now, so sees quite a bit of upside from here. But what would you say it is that sets you apart from your competitors? Because obviously we're seeing more and more companies in this space.
Yeah, so Flywire really believes that to digitize the industries that need the help, you really need a combination of software and payment capability. You need much more than just a pay button. And so what we have is we have this deeply embedded software. It understands these industries. It connects to the systems of records of our clients, truly helping them get paid. So you imagine a major university has tuition payments coming in, all different types of payments all throughout the year. Our software is deeply embedded into their infrastructure. We then have a shared set of capabilities that can work for hospitals versus educational institution versus businesses. And then we have our own network. And that by far is probably the biggest point of differentiation. We take away all the complexity, all the pain points from our clients. They shouldn't have to be experts in payments. That's really what we're there for. And so that's really what differentiates Flywire. I'd also say it's our Flymates, our employees. We have an amazing group of people, 40 nationalities, over 32 languages spoken inside the company. And it's them every day that are out there executing for our clients.
Flymates, I like it. So I do want to know, though, I'm very curious, when you say large sums of money, what's the minimum that someone can transfer on Flywire, and what's the maximum?
Yeah, we really focus on our clients, and we're typically attached to someone that's in a billing process. And so you could see a university bill, it could be tens of thousands of dollars. You could see a B2B transaction that could be hundreds of thousands of dollars or even millions of dollars happen through Flywire. So again, don't think of Flywire as small dollar e-commerce. It's not a money transfer, it's large ticket, typically invoice-based payments where we're really making it easy on the payer and easier on our client, the receiver of the money.
Any involvement with crypto at this point, or plans to incorporate crypto payments?
It's always something we monitor. Obviously, there's a whole ton of regulation happening around it. Our clients, again, they're relatively conservative educational institutions, businesses, medical hospitals. So we're going to wait out the regulation changes, but always something we can add to our payment network. It's really important. We own the bank accounts. We have the credit card processing, the third-party payment methods like PayPal for PayPal and Venmo. You have all these methods inside Flywire. Someday I'd expect a stable coin or crypto to be part of it, but not today.
Biggest growth opportunity at this point? What are you most excited about as you look ahead?
Yeah, we had an amazing 2021. We grew payment volume over 75%. Non-GAAP revenue grew over 58%. And so we're really starting 2022, quite excited. If you look at what we're investing in, it's our biggest investment year as a company, and yet we still guided to EBITDA profitability as a business. So we're really excited about the investment plan. It has really three main focus areas. First is product and engineering. So think of us as investing in more solutions for our clients, helping them get paid all around the world. That second set is really go-to-market. We have over a 50% increase in our go-to-market teams, really for geographic expansion and to help accelerate our winning in the industries that we play in. And then the third investment area is really around our Flymates. We're in the middle of a massive war for talent out there, and we have this great culture, this great team, and we're looking for all the ways we can to invest in our people.
And Mike, just very quickly, biggest hurdle in getting there? We're talking about companies facing so many headwinds at this point. What's the biggest obstacle you're facing at this point?
For us, it's really just about execution. We have customers that are super loyal to us. We have an amazing team. We get to go out there and execute, and that's what we plan to do.
All right, we'll leave it there. Mike Massaro, CEO of Flywire, thanks so much.
Thanks very much.
Up next, it's time to take a look at some overlooked stocks. We'll be breaking down a name in the electric vehicle space, find out what's got EV Go on the move. That's next ahead on the TD Ameritrade Network. Stay tuned.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Trading isn't just a hobby. It's your future. So you don't lose sight of the big picture, even when you're focused on what's happening right now. And Thinkorswim is right there with you to help you become a smarter investor. With an innovative trading platform full of customizable tools, dedicated trade desk pros, and a passionate trader community sharing strategies right on the platform. Because we take trading as seriously as you do. Thinkorswim by TD Ameritrade.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you could become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Welcome back. Time to take a look at a few names that may have slipped under your radar in today's session. John McNichol joins us now from Salt Lake City for some overlooked stocks. Hey there, John. Let's start with EVgo. It was a big winner today, up 5%, based on a deal with JP Morgan Chase. Tell us about the news and what their chart is telling you.
Yeah, that's right, Caroline. So, JP Morgan Chase announced that they're working with EVgo to roll out electric vehicle charging stations to 50 of its U.S. branch locations starting this summer. Now, that seems like a relative small number, but since EVgo came out with their earnings back on March 23rd, they did have an increase in revenues, although they have been losing a bit more money. They do have a pretty aggressive plan to have about 3,000 fast charging stations, and that's what the operative word is. They're fast charging stations around the country over the next year. And so they've been doing some partnerships, with different, branch locations, in this case with Chase Bank. They've been looking at some partnerships with auto dealers as well, such as Toyota. One of the pluses with them is they generate 100% renewable energy. So positive there on the environmental front. And, there's possibly a few things that will continue to build up some of that momentum, with certainly concerns as far as with oil supply, with the current administration pushing towards higher MPG, as well as the continued drive to EV, kind of sets up EVgo from a standpoint of that demand, along with also government investment in charging stations around the country as well. So we'll see how that plays out. Technically, the stock has been doing relatively well since the beginning of the year. We're talking about a stock from a technical standpoint that's been trending since January there, up 27% year to date, although it's still off 35% from its 52-week high of 1959. The stock has been trading in a range over this last year between around the $7 and $20 range. Now, currently, it's in the mid part of that and also above its 50 and 200-day moving average, which makes that a positive on the longer term front. Based off of where the current trend is, the upper part of the channel is somewhere around that $16 to $17 range, which currently is about $4 to $5 above where it is right now. Now, the analysts may be a little bit behind. Generally, analyst predictions are looking at about a $14.20, which is below some of the more recent analyst projections. However, Evercore did make an adjustment to the upside of $22 from 18 and maintains an outperform rating.
Yeah, I was looking, median price target of 14. So I was wondering if you're seeing any resistance at that level, because we're starting to approach it, right?
Right, that's right. We actually did hit that level a couple sessions ago. Price pulled back, which is typical in a trend. We can see that price channel that's formed, Caroline, since early January. So we're kind of in the midpoint of its longer term range. And the longer it holds, the upper part of its trading range for this last year, may set things up for prices to trade up into that range. And again, with some of the catalysts that I've already mentioned, and certainly looking for the market overall to support it may help. Now, there could be some downside to this. It is kind of more of a hyper growth company. And so with concerns with interest rates and with growth can have a hindrance. But again, with some of the things that have been mentioned, as far as the drive to EV, government grants and investment in there, stocks like EVgo can benefit from that.
Yeah, sounds like some pretty key catalysts. All right, last name on your list, Intrepid Potash, ticker symbol IPI. Talk about a big move higher. This one's up triple digits for the year, 140% almost. What are you looking at in this chart? Yeah, that's right. As far as full disclosure, this was actually a stock I had on the back burner for yesterday's overlooked stocks. Probably should have been on the front burner, as it is up 15% today. You mentioned the stock, earlier in the session was up 130% year to date, now closer to 140, up about 200% trailing 12 months. This is a stock that is benefiting from, the commodities sector as a whole. Not a lot of news on the company, but, with the impact of the Russian-Ukrainian conflict on top of, concerns with inflation and supply chain, potash companies have been, in the driver's seat well over the last year. Now, it's kind of interesting with this stock, not as large as some of its peers, such as Mosaic, which I'm sure that you've talked a bit on the show, along with CF Industries. Those companies have market caps of over 20 billion, whereas with Intrepid Potash has a market cap of 1.2 billion. So a bit on the smaller side, but what is interesting, even with the moves in these prices, we're talking about a PE ratio of less than 5% compared to their peers of about 16% and 24% respectively there. They have a pretty high profit margin as well, which may mean a kind of a catch-up here compared to some of those peers. All right, we have to leave it there. John McNichol, thank you so much for those overlooked stocks, and thank you for watching. Market on Close is all done, but your first trade is next, so stay tuned.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Welcome to Your First Trade. I'm Scott Connor, a 30-year veteran trader, and it is Thursday, April 7th. Now on our show, a lot to cover. First, we'll kick things off with Ben Watson, the chart master, and look at Exxon, the oil conglomerate. That's symbol XOM, and we'll put on an example trade that expires before its earnings coming up in just a few weeks. And then with John McNichol, we're going to talk about something very important to long-term investors, and that's in terms of charting. We're going to look at what's called simple moving averages. What are they? What are their different forms, and how can they be leveraged by long-term investors? Not with individual stocks, but also with the major market indices as well. And then finally, I'll wrap up the action on Wall Street as 3 out of the 4 indices did finish in the green today, but it was a bumpy ride. The market started off lower, but then tried to recover as the day went on. All right, well, let's start from the top, as I mentioned, and we're going to look at an example option strategy based on an energy company, Exxon, a fully integrated multinational energy company. But before we get to the trade itself, let's bring in the chart master, Ben Watson, and get his read from what he sees on the charts. Ben, thanks for joining us once again on Your First Trade. And we're looking at energy stocks. Now, this is a sector that's been on the move and had its own volatility, and actually in the last year, maybe 6 months to a year, has actually had a pretty good overall performance. But Ben, what do you think right now, looking at these charts, particularly of Exxon?
Boy, I'll tell you what, Scott, if there's ever been an area where there's been a lot of volatility and a lot of potential for movement, it certainly has been in the energy space recently. And we've seen Exxon Mobil really reflecting the movement largely of the crude oil contract and seeing some very similar types of movement. Right now, perhaps a bit of a squeeze, if you will, long uptrend, squeezing into this kind of intermediate sideways symmetrical triangle that's been centered right around this 83.5 mark or so. But today, we get another little break to the upside, this gap up rally that takes price on Exxon Mobil outside of that triangle just a bit, with that potential to continue to move, maybe up to the 87 mark, which is that next previous high, maybe up to the 89, which would be the top of the triangle there. And those areas as resistance could potentially, Scott, be turning points. We've seen the price of the crude oil contract start to pull back a little bit as well, but still some bullish momentum here in Exxon Mobil. If it breaks down, you've got a support around 80. That's also coincidentally right about where that 50-period simple moving average is. And then you've got near the base of the triangle around the 76 mark or so. Now the RSI, that relative strength indicator, it's rising, and it's rising above mid-range, but it's still somewhat downtrending. So there are some bearish pressures in the near term that are squeezing against that longer-term uptrend. So we might see some perhaps bullish to neutral movement waiting for this next earnings announcement that's coming up, as you mentioned. And if you were to look at this on a longer-term chart, there's some resistance up around this 85 mark, which is just about where the stock ends up today, that goes all the way back to the September 2018 timeframe as a potential resistance. So the price of the stock moved down with the pandemic, moved up as we've seen prices and oil prices continue to move on geopolitical events, and now seems to be perhaps consolidating a little bit here in the near term, again, ahead of that earnings announcement. Scott?
Now, Ben, you just mentioned that, obviously it's in this triangle formation right now, and of course it's sort of sitting around that 85 level, but you also mentioned that there was support at 80, and that also is where the moving average is. Now, when a stock is in this triangle formation, Do you give sort of extra attention to that moving average in terms of looking for support, Ben?
Yeah, I think you certainly do from a technical analysis perspective, as well as the fact that that diagonal trend line that's really defining the bottom of this triangle falls kind of right along the line with that 50-period simple moving average. So both of those areas kind of acting as a support area, and we can see that there's even a little bit of a horizontal support right around that 80 mark building as well.
Got it. All right. Well, we'll take all that into consideration, but it certainly looks like, since the early part of this year, it's been moving just above and below that 80, well, maybe about 82 level, somewhere right in the middle. And as a matter of fact, I was looking at the stock this morning, and the stock was actually down on the day, I believe, at one point, and then rallied with the rest of the market back up to the 85. But Ben, all right, good. We'll take that in consideration, put together an example trade, and we want to stay, like I said, inside of the earnings announcement, which is at just the end of this month. So it might be a short window here. All right, thanks, Ben. And we'll see you tomorrow to wrap up the week on your first trade. All right, let's go to the Thinkorswim platform, and I'm going to go right to the trade tab. I have Exxon in there already. And let's start, as we always do, with time and price for an example trade. And we know earnings are the 29th of April, all right? So that's 22 days to go. So to stay inside of that, the longest time frame we can look at is 22 days, about 15 days, so a little over 2 weeks until expiration. Now, if a trader was thinking that the stock might go ahead and continue to hold above that 80-81 level, particularly in light of the fact that oil, remember, it hit 130 not too long ago, now is hanging close to that 95 level, 95, 97 level. So if a trader is thinking that oil might have found a near-term bottom and might hold there for a while, or perhaps even move higher again, that would, of course, align with that particular outlook. But let's just assume that now, and let's take a look at the stock now trading around 85. Let's go to the put side and drop down to that 80 level, the $80 strike. Again, we're only looking at about a little over 2 weeks out. And there's a probability of about 18.6%, right? Now, that's what the in-the-money probability is telling us. Again, that's a theoretically calculated value, but somewhere around 18, 19%. So we'll just keep that in mind. Now, what if we go to 81 and look at that strike? The probability of that strike going in the money is about 24%. So it moves up a little bit, but still the probability overall is still low of going below 81. So tell you what, let's look at maybe the 81-80 put spread and see what kind of credit can be received for that. I'll start off by selling the 81 put. Click on the bid price. Of course, that creates a sell of one of the 81 puts. Now hold down my control key and buy the 80 put. Now it says about 17, 18 cents. So that's about where it closed today. And tell you what I'm going to do. I'm going to raise that up, as we often do, to 20 cents. And make this not a day order, but a GTC. Remember, a good till cancel order means this order will stay in the market until either gets filled at that limit price or, of course, gets canceled. Or, of course, the options expire without it getting filled. Of course, that's another possibility. But if a trader was to collect 20 cents on this strategy, what would be the max loss and max gain? Well, max gain would be the 20-cent credit received. Max loss, of course, would be 80 cents. Why? Well, it's a $1 wide spread, and the max loss would be if that spread went to its max value of $1. So if you're selling something at 20 cents, you don't want it to go to $1 because that represents the max loss. Let's hit confirm and send and take a quick look at this one and see that, yes, the max profit is $20. The break even is, the max loss is $80. So that all applies with what we've said so far. Now, keep in mind, when you're looking at max loss, max gain, we also have to factor in any transaction costs. And think about this, it's also a vertical spread. So that means if the stock does get down to that 81 level here in the next 2 weeks, particularly on that expiration Friday, there'll be some management responsibilities for anybody taking on this position, right? Because remember, we're short the 81 put and long the 81 put, long the 80 put. Now, being short a put, remember, keep in mind, you can be assigned any time. That likelihood goes up once that option goes in the money. So again, if the stock gets down to that level, that's something that the trader is going to want to keep in mind. Now, particularly, like I said, if the stock does get down around expiration day to that 81.80 level, well, again, then we have to keep a close eye, particularly if the stock ends up between the two strikes. Because the short put would be assigned, the long put would expire worthless if it ended up between the strikes. So again, things you want to keep in mind. But for right now, I'm going to go ahead and send that one out. It is working in the marketplace, and again, that's GTC. So if it doesn't get filled Friday during the market trading session, and perhaps Monday, again, assuming markets are open. All right, well, that's going to do it for our example trade on Exxon. Don't forget, on Fridays, we review all of the example trades for the week, and we will do that tomorrow as well. All right, that's going to do it for our example trades. Now, stay with us because, as I mentioned, we're joining John McNichol, and we're going to talk about moving averages. Now, that's a chart study, and we're going to talk about how those can be used by long-term investors as well. All right, stay with us. We'll be back after this short break.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you could become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Welcome back to Your First Trade. I'm Scott Connor. Now let's focus on long-term investing. As I mentioned, today we're going to examine a set of popular charting studies known as moving averages. Now you'll learn about the different types of moving averages and how they can be used to analyze not just individual stocks, but broad-based indices as well. And after a volatile start to the first quarter of 2022, we'll go ahead and assess where the U.S. indices are relative to their moving averages. Now, joining me to break down moving averages and their potential application is Your First Trade contributor, Scott Durfee. Scott, thanks for joining us again. Always a pleasure having you on Your First Trade. And it's moving averages today. So maybe let's just kick it off, Scott, and give us a quick definition for our viewers. What do we mean by a moving average?
Yeah, you got it, Scott. So a moving average, Scott's really just a calculation that's designed to analyze price data through a series of averages. These moving averages, they can actually include different subsets of a full data set. We'll get into that in a minute, which actually results in various moving average types. So some of the principal moving average types that we see, they include simple moving averages, cumulative moving averages, and weighted moving averages, Scott.
Okay, good to know, Scott. Now we're going to focus obviously on simple moving averages today, and I like your description there. It's kind of a chart of average price movement for a stock. Instead of looking at individual candles, we're looking at averages. That makes sense, Scott. So let's talk a little bit about the application of moving averages, Scott.
Yeah, so this is important. For investors, moving averages are displayed as studies on charts on the Thinkorswim platform. And they're essential tools that many technicians actually use to help form opinions about a stock's future price movement. So moving averages can be considered individually or comparatively to help identify potential trends and momentum, Scott.
Got it. All right, so just keep in mind this is all part of technical analysis, and long-term investors can use this to get an idea of those moving averages. Now, let's, as I mentioned, Scott, our focus is going to be on the simple moving averages, so maybe we should just start right there, Scott. What do you think?
All right. Yeah, let's do it. So simple moving average, Scott, or we'll refer it sometimes also as an SMA. It's a chart study that's calculated by summing the closing prices. So adding the closing prices together of a security over a specific time frame, and then dividing this total by the number of periods. So, maybe easier said, the SMA, or the simple moving average, is basically the average stock price over a period of time. As a trend develops, Scott, a moving average will slope in the direction of the trend and can indicate its strength based on the slope of the moving average.
Got it. All right, so that makes sense. So it's an average of the price movements. Now, sometimes when you're just looking at individual candles, you can get a lot of, especially it's been so volatile, Scott, a lot of chop, but the average tends to smooth that out and give the trader or long-term investor maybe a little more perspective, depending on how long the time period is, of course. Scott, let me just show everybody real quick how they can set up the moving averages on Thinkorswim. Join me here on the Thinkorswim platform. I'm going to go right to the charts tab, and I have Exxon in there because, Scott, we were just looking at example trade there. And I'm going to go ahead and show everybody just how to add a simple moving average. Remember, when we're adding studies, we go to the beaker and just click on that. Now, I'm going to move over here to the box. And the reason I like this one, Scott, is because you can just, there's so many different studies in there. It's just type in one word. Now, we're looking at simple moving, so I'm just going to put in simple, S-I-M-P-L-E, and there it is, right there, simple moving average. Now, I highlight it, Scott. Now, I hit Add Selected, because now it moves it over to our studies and strategies that we've added. Then just hit Apply and OK, and there we go. Now we have the default simple moving average in there, Scott. And, of course, remember, you can always edit a study by right-clicking on it and then going to Edit, and then changing colors or time periods and all those kinds of things. As a matter of fact, maybe, Scott, I'll make this one a little bit wider so we can see it. So I'll change it to a 3, and now it stands out a little bit more. Okay, so now we know how to get those simple moving averages. Now, Scott, let's talk a little bit about how these moving averages are used.
All right, Scott. So one analysis technique often used with moving averages is identifying price breakouts. This is when the price of the stock, basically the price crosses over the moving average line, either up or down. So potential bullish breakouts are indicated each time the price crosses above the moving average. So a bullish crosses above. When the stock price falls below the moving average, we can consider sometimes, traders and investors can consider that a bearish breakout and sometimes recognize it that way, Scott.
Scott, as soon as you said the word breakout, the stock Twitter jumped into my mind because of all the news that we've had this week with Elon Musk taking a 10% stake in the company, approximately, becoming an active investor. But I put the chart of Twitter up. Now, what I'm going to do, Scott, is I'm going to right-click on the study itself and click Edit Studies, and I'm going to put in tell you what, I'm just going to take the length or the number of days, right? Remember, it takes the average of, I'm going to put 20 days in there, Scott, and hit Apply and OK. So now we're looking at a 20-day average. Now you can see how the charts or the candlesticks move up and down, but look how smooth that 20-day average chart is. But then look what happened here. Now, it broke above that back here, but wow, take a look at the stock. So I didn't realize, Scott, that it actually had broken above its trend line a few weeks before this news came out, Scott. But interesting to see. Now, what about the time frames? I just chose 20. Now, it's important, obviously, in picking the time frame, but give us a little color on that, Scott.
Yeah, so since the simple moving average gives equal weight to each daily price, recent market volatility, Scott, may not stand out. So longer-term moving averages tend to blend in minor fluctuations fluctuations, showing a smoother, longer-term trend. And shorter-term moving averages, they tend to display recent trends, but may neglect the long-term or the bigger picture.
Got it, Scott. All right, well, let's go back to the same chart with that 20-day moving average. And Scott, I'm going to add a 50-day just to see how they look. How are they different, as you just pointed out? So let's go back to, again, the same chart, put in simple, S-I-M-P-L-E. There we go, simple moving average. Now I'm going to go ahead and add selected. So you can see there's two simple moving averages in there right now. And I'm going to change this one. Now you don't have to edit it from the chart itself. You can edit it right here. So I'm just going to go right over here and click on the edit button. And I'm going to make this, what did we say, Scott? 50, right?
50,
I'm going to make this a 50-day moving average. Okay. And I'm going to change the color on this one. Let's make this one maybe yellow. And so it stands out from the other one, and make it the same width, 3. Now hit OK. And then hit apply and OK. And OK, Scott, there we go. So now we're looking at a 20-day and a 50-day. Now the 50, which is the yellow line, definitely, you're right, Scott, it looks a lot smoother than the 20-day. It seems it has a little choppier. What about when we're looking at two of these moving averages, like this 20 and 50, Scott?
Yeah, so Scott, we mentioned earlier that one of the ways that we can consider the use of moving averages is to use them comparatively. And that's what you're doing here. We do this by adding two separate SMAs to the chart, like you've just done, with different time frames for each one. Remember now, this can be set by changing the length parameters like Scott just showed us. And you know, Scott, a good example of two commonly compared lengths could be the 20 and 50-day moving averages, like you just showed us.
All right, Scott. So when these cross over, what's the significance there? Because I know there's a lot of talk about that. And we can see here just recently, just before, I'm going to highlight this portion, that big move, you can see about 4 or 5 days earlier, the 20-day crossed over the 50, Scott. Any takeaways there?
Yeah, so when we see crosses, that's when investors and traders tend to take these as action steps, right? This is indicating an opportunity for a lot of traders and investors when it breaks above, like we mentioned earlier. But when it breaks above, now we call this. There's a lot of names attached to these types of crossovers. We have a golden cross, which is when it gets bullish, and then we have what's, and it's not a great word, but it's the one used nonetheless. A death cross, which is where it turns down. One would be bullish, the other one would be bearish. Obviously, the adjectives themselves can help describe which is which. The death cross being bearish, the golden cross being more bullish. And again, once again, Scott, just indicators of times when investors and traders may look to make changes, whether that's to get in or get out of a position.
Yeah, Scott, I'm looking at his Twitter, and you know, it's only crossed over in 1 year 3 times. So it's not something that happens all the time, but kind of interesting. Now, Scott, we just have we have 30 seconds left, but I wanted to put in SPX, the S&P 500, and just get your takeaway just real quick in 30 seconds. You can see that we're getting some crossovers here, but recently we just had the 20 cross above the 50. What's your take there, Scott?
Yeah, we do have the 20 crossing above the 50, and now technicians will look at this it'll kind of grab their attention. Technicians will see that cross as a potential bullish entry. However, on this one, Scott, we have some shorter term downward momentum. So this would be one where a trader or an investor would look for maybe some maybe to have it substantiated further by some more sideways movement or something along those lines. But that cross moving up there is positive momentum, or can be a positive sign.
Got it. All right, well, Scott, unfortunately, we're out of time. We'll have to come back to this topic. This is very interesting. But thanks for helping us understand simple moving averages and, of course, how they can be used in conjunction, as we just saw here. Scott, thanks again. Always a pleasure having you here on Your First Trade. All right, take care. All right, stay with us, folks, because I'm going to wrap up what happened on Wall Street today. It was another volatile day. We'll explain what happened and what was impacting the markets. We'll be back after this short break.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then watch list. When the default list appears, select the name box, then create watch list. Enter a watch list name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watch list, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Welcome back to Your First Trade. I'm Scott Connor. Now it's time for the wrap on this Thursday, April 7th. Well, all four indices opened it down after the market being down 2 days in a row, and it didn't look good after the first 3 hours, but the market turned around and started to move higher. 7 out of the 11 sectors were up today, and the S&P 500, well, 275 stocks were up, and about 225 were down on the day. But as you can see, 3 out of the 4 indices up. Not big percentages either way. Looks like the market was a little bit more in a consolidation mode today after 2 big days of losses. Now, let's take a look at some of the other products that we keep an eye on, particularly those that are affecting inflation, and starting with oil, which ended up the day at about up 71 cents, holding right around that 96 level. Actually, it moved up to about 97.18, but was up on the day. Now, gasoline also up slightly on the day, ending at $3.05. So what you and I pay at the pump is down from, remember, it got as high as $3.89. So we'll see if those prices don't come down at the pump here soon. Gold up about $11.50 on the day, closing at $19.34. Now, what about the 10-year yield? Something we've been watching very closely along with the Fed, and it moved higher as well today, touching 2.67. Now, that was the high on the day, but it finished around 2.65. That's up about 1.65% on the day, but it looks as though interest rates continue to trend higher. Now, what about Bitcoin? We've been following that also. Well, it got as low as 42,700. Remember, recently, just a few days back, it was trading at 48,000. That was the low on the day, however, and it did rally back to 43,570. Still down slightly on the day. And finally, let's look at VIX. That's the fear index. What was happening in terms of uncertainty in the market? Well, the VIX is telling us that it was down on the day. It lost about 55 cents down to about the 2150 level. It had touched at one point during the day 23.8, but came back down as the market rallied into the close. Now, what about stock sectors? Well, healthcare, consumer staples, and energy led the way today. We take a look at some of the names in that group. We had Pfizer, Abbott, Colgate, ConocoPhillips, and Occidental Petroleum showing some strength out of these 3 sectors that did lead the way today for the markets overall. Now, where do we see weakness? Well, that came in communication services, utilities, and real estate. Let's take a look at some of the names of the stocks there. Alphabet, parent of Google, down a bit. Twitter, as you can see, also down about over 5%. We also saw Southern Company, AEP, American Electric Power, and of course, Simon Property Group, all lower today. Now, what about individual stocks? Well, as I mentioned, well, actually I didn't, but let's get to HP. HPQ is the symbol, but that's Hewlett Packard. Now, Warren Buffett took an 11.4 stake in this company. That's 121 million shares worth about $4.2 billion. That stock was up about 15% on the day, up over $5 a share. Now, what about Costco? Well, it reported year-over-year increase in net sales. The stock hit an all-time high. It was up almost $4 on the day, and that's a significant, or $23 on the day, almost 4%. I take that back, 4% on the day. Costco continuing to show strength. Now, what about economic data today? Well, we had jobless claims, and previously they came in at about 202,000, and we were expecting something around that, 200,000, but they came in at 166,000. Now, that's good. Jobless claims you want to see come in lower. This is the best number we've had since 1968. All right, well, that's going to do it for the wrap here on this Thursday. Don't forget, we're back tomorrow at 4:30 Eastern Time to wrap up the week and review our example trades. We look forward to seeing you then.